Hey guys, welcome to Exploring Park City, and we are up in Guardsman's Pass. Amazing place to be in the fall. You can see the leaves are starting to change. Today I want to talk about the Federal Reserve meeting and what people aren't saying, like why are mortgage rates actually increasing now? Everyone's just posting 50 basis point hike. Yay, it's good for markets all around. But we're going to get into, what it means for you, stocks, real estate, and, realistic. Kind of diving a little bit deeper. So here, we'll get a little view for you. So the Federal Reserve cut 50 basis points today. It's the first cut of an easing cycle after having one of the highest hiking cycles in history. We've been at a 5 to 5.25 federal funds rate, and which is pretty restrictive, and this is the first 50 basis point cut. To note though, out of the 21 times that the Federal Reserve started an easing cycle with a 50 basis point cut, 50% of those have ended up in a recession. So I'm just trying to give you not just all the bull stuff, some bear arguments too here. So to just a little bit about the Fed, they have a dual mandate. It's stable prices, which is inflation, and maximum employment. So they've been at that restrictive level for about a year now. So that is brought inflation down from 7% all the way down to 2.5%. Their goal is 2%. So they feel like that they have almost, beat inflation enough to then now start cutting. There has been a slowing down in hiring, their dual mandate, they've kind of got inflation under their belt, and now they're attacking the job market before we see mass layoffs. Because once you see mass layoffs, then it's too late. At that point, you get a spiral of deflation and people losing jobs, a recession, and that's harder to climb out of. So they're trying to get ahead of that, and I believe markets are rallying. You can see the stock market's like up insane amount right now, all-time highs, based off of a 50 basis point cut, because the market was pricing in 50-50 on 25 or 50 basis point cut, and they went with 50 basis point cut. So that's the more bullish for markets, for like risk assets like the stock market. So you see stock market rallying a lot, and I believe that's because they didn't have any bad data. They just came out and cut 50, and then said the economy's doing great and the job market's strong. So everyone was like, what? Okay, great. And they're like, we just want to keep it here. So I believe that's why markets are rallying. Why I believe that mortgage rates are actually increasing is because mortgage rates are not tied straight to the federal funds rate, because a lot of misinterpretations there. Mortgage rates are actually bonds in general kind of are more tied to credit. So when bond yields are higher, credit is higher, like for mortgage rates, car loans, revolving credit, etc. all basically tied to that bond market. And we saw a jump in yields in bonds, which is basically the opposite of what the Fed wanted when they cut it 50 basis points. They wanted to ease monetary, and it actually tightened, right? So it's harder to go get a loan now. They wanted it to be easier, so people went out and spent and grew the economy. But the reason why I believe that mortgage rates actually increased, that the 10-year treasury went up, I think 15 basis points, was because everyone was pricing in recession, right? Everyone was in bonds for a recession. And then when the Federal Reserve came out and said, we're in good shape, economy's great, but we're starting the cutting cycle, everyone was like, oh my God, we just beat inflation, like soft landing, no recession, let's go. And so people are taking profits on bonds, because a little bit on like bonds is when you lock in at a high bond rate, and the yield comes down, then your bond's worth more, right? So people are like ditching bonds because they're like, okay, the bonds aren't good, like we're not going to price in a recession, yields aren't going to come down much more. So you're going to see a lot of profit taking right now in bonds because we didn't have bad data. So I believe this is just a short term. I also do believe that we will have bad data that comes out soon, that we're going to be seeing it and be like, oh, that's why they cut 50 basis points. It's not all, good news, right? Like they don't just come out and cut 50 basis points because everything's going great. They probably see something that we don't right now. So once we see that first set of bad data, I believe bond yields will come down, which will bring mortgage rates down, and also we'll probably see a sell-off in the stock market. Valuations are like high right now, right? Like PEG ratios are high for a lot of companies, and like just valuations are high compared to earnings. And also you'll see a lot of earnings come down in bad times. And I also see earnings already coming down. And so anyways, this is too much stock market talk, but so what that means for real estate, actually, Jerome Powell said something very interesting that I've been thinking about for a while, and he had a caveat about it that I didn't think of, that is definitely bullish for real estate. So even recession or not, and so he was saying that when mortgage rates come down, because he also said that this will like when he was talking about real estate, he said the mortgage rates will have a lag, just like everything. Like when they cut, the only thing immediately affected are like money market accounts and saving yields. So that's going to be directly affected right now, but everything else will take a lag, just like how hiking took a lag for that to work. So once you do see mortgage rates come down, then you'll see more sellers come on the market, because a lot of people aren't selling because they have a very low mortgage rate and they're locked in, and they're like, why would I sell right now when I'm locked in at a really good rate? So we have a inventory problem, right? So prices are stable right now in real estate, but they're high still, right? Especially when you're talking affordability, when mortgage rates are at like 6.5%, 7%. It's very unaffordable. Scale is very unaffordable. So when you see rates come down, then the people that have low rates on real estate are going to be more inclined to sell. So I thought when rates come down, that then entices more buyers. There's more demand because it makes it cheaper to buy. So when I thought rates come down, inventory will go up, and that will keep prices stable. I've been thinking that prices are going to be stable and boring for the next while, foreseeable future. But the caveat that which is in plain sight, but the caveat that Jerome Powell said is, when rates come down, there'll be more sellers willing to sell. But then once they sell, they're another buyer in the market. So that doesn't really, cure the inventory problem, because that seller is just going to be another buyer. And so we're still going to have an inventory problem. He's saying, I don't see a solution for inventory. And so that's bullish for real estate, because I've been thinking like, okay, inventory is going to come up and it'll flood the market, and we'll get, a lot more buyers in the market, but it'll be even. But he's saying it'll still be uneven. And so no matter what happens, recession or not, I do believe that real estate is going to be strong during this upcoming next little bit. And so that's why I believe you know, if you're thinking about it, it's a good time to get in, because you know, it's going to take years and years to figure out the inventory problem. Also, real estate's a very local thing, so you got to figure out, you know, in your market, is there an excess amount of inventory coming on? Where is that? And like, you know, what risks for you in your own situation. So but if you want a realtor that like keeps up and like geeks out on all this stuff and wants to, you know, look out for you, and you know, hit me up. I am in Park City right now. This is looking down towards Park City, Old Town. I was just walking, and over there is that Guardsman's Pass side. So amazing, beautiful morning up here. So but yeah, hit me up if you're looking to move to Park City, or if you have any more questions about this. But yeah, you know, stocks are up, you know, mortgage rates are up, but I think, you know, that should reverse the first time we see, you know, data that isn't all roses. So be on the lookout for that for the next couple months, and I'll keep you updated. So, you know, subscribe and hit the bell for notifications on the next update. See you guys.